Hey everyone, welcome to High School Dropouts Advice. Today we will talk about Sunlight Financial because of the green energy movement we will have under the Biden administration. This is an excellent opportunity to diversify our portfolio. Let me explain to you who Sunlight Financial is, what their business model is, how their fundamentals are, how the potential market looks like, and what competitors and risks this company face. On their LinkedIn profile, we see that they currently have 217 employees who look quite happy. In most cases, happy employees will translate into satisfied customers. Let's look if this is the case. On Google, they have a pretty good rating of 4.4. This stock just launched on January 15 and we have a big investor already, investing 250 million into Sunlight Financial. You might have seen Chamath before. He is quite active on social media and he was one of the early executives at Facebook. As you can see, the stock has rallied around 30% since its first day and it trades under SPRQ. At the moment, they are still trading under Spartan Acquisition 2 Corp, but this will change soon. There are certain requirements and different shortcuts to get listed on the American Stock Exchange, and this is the way they choose if you ask yourself why the name does not match. Now we know that the company has happy customers, the stock rallied well, and big names are investing in the stock. Now let us see how they do business. Let me pull up this source from their website. So Sunlight Financial functioned as the point of sale and connects the customer with a contractor who builds the solar system on their roof. Sunlight Financial also offers the consumer an attractive loan for the solar roof. The loan agreement will be sold to a capital provider, so contractor will get a job and can make money. The consumer receives a solar roof and a loan for the construction, and the capital provider gets paid interest on the loan. So everyone is happy, right? Oh, I forgot the most important party. Our company and stock, Sunlight Financial, get paid a pre-agreed amount for the contractor for the referral, and Sunlight gets paid from the capital provider for originating a loan. If you are familiar with how a mortgage company works for residential homes, you understand this business model. It's pretty much the same business model with solar roofs instead of houses. So the business model is a win-win-win situation for all three parties. The contractor wants to expand and install more equipment. The consumer wants to save money and install a solar roof. And the bank or loan provider gets access to a loan and get nice interest on its investment. We can say that this business model should be a perfect one under the Biden administration. This will speed up the transformation into greener energy. And I think that new or bigger tax cuts or benefits can speed up the transformation. We will see, but for sure, this business model will have a promising future in the upcoming years. By the way, if you have no brokerage account or you need a second brokerage account to buy stocks, I can recommend you Webull, where you can get 2 free stocks up to 1850 when you deposit at least $100. You can find the link to register below in the description. Let us get into some fundamentals and see how the company did in the last couple of years. We can see a nice steady growth. This is always nice to see. They have funded over 3.5 billion in loans and have arranged to finance more than an estimated 100,000 residential solar systems. So this is good. We know they are experienced and have a business model which is proven and generates positive cash flow. Let's look at their free cash flow statement. We can see that they made over 15 million in 2020 and they estimate 38 million in free cash flow in 2021. And ongoing, we can see a projected growth of 40 to 50% year over year. These are some impressive numbers, but with an easy structured business model like this, it's easy to generate a positive income. The highest costs most likely are the employees who take take care of the customers, contractors, originate loans, and transfer them to the banks. So is it a buy? Everything sounds perfect, right? But wait a minute. Why should a business which makes good money need our money? And why do they want to share their profit with us? These are valid questions. But let me tell you that Sunlight Financial is not the only business with this business model. As you can see right here, there are other providers like Open Lending, SunPower, SunNova, and SunRun. So we can see that there is competition on the market. This means Sunlight Financial needs our money to scale up, to make more money. So it will be important for us to always compare Sunlight Financial market share with the competitors and see how quickly they can conquer the market. Scalability will become a crucial role here. According to Sunlight Financial, they have the cheapest valuation, and seeing that they are very productive for their size, as you can see in the last row, this should give us a good feeling. But give me 1 second and let me tell you that their PE ratio, price to earning ratio, is at around 30 right now. This means the company is not necessarily on a Black Friday discount, but it's not an overpriced stock for the positive outlook it has in the next couple of years. So if you want one of the safer business models out there and have a company that makes you money, Sunlight Financial might be for you. But also remember, I'm not a financial advisor, so do your own due diligence. I'm just a guy on YouTube. Your money is your responsibility. If you like my video, please give me a like and share the video with your loved ones. Then subscribe because you don't want to miss any other exciting stocks, news, and investment opportunities. Many thanks. See you hopefully in the next video. Thank you. Bye.